Thank you for the invitation. Actually, my first time in Riga. It was about time. Very happy to be here. So my task, I've been asked to talk about the global outlook without really speaking about the US and China. Well, it's not that they are irrelevant, it's that we have a special focus on them in 20 minutes, actually, with my colleague Glenn, who is really on to this topic. So I will guide you on the global outlook in general. I will focus on Europe, global inflation, and also give you some insights what's actually going on in Sweden. That we wonder, right? All right, so let's get going. This is some nice maps of Europe. And I can tell you, we released our fresh forecast, it's now 2 weeks ago. And they are still, the due date might be short nowadays, but they are still valid. It's a mixed picture in Europe for the moment. And we have this, a bit of a special situation that in general, the southern Europe is performing better than the northern parts. I don't think that's onto the weather or religion. It's a bit of a actually consequence of what happened during the pandemic. So the reason why, for example, Spain is doing quite good now is that they have a big services sector still actually recovering from the pandemic. Germany, as you can highlight, so this is GDP growth for 2023, for 2024. Germany stands out here, as you can see, with a declining economy even. That's rare, right? And that's bad for many of us. I guess many of you also have business with Germany. That stands out. It's the heaviness of the German manufacturing sector that really weighs on that economy. And then you probably noticed Sweden, so I will come back to that. You probably also noticed Ireland. What are they doing? It's called the Celtic Tiger again, actually. They were called that, I think it was 30 years ago. So now what they do there is they manage to attract foreign direct investments. And that is because of, first, they are within the euro area, which Sweden is not. They speak pretty good English. They also have a favorable tax system. So that makes them very attractive for US multinationals, Asian multinationals, to have one headquarter in Europe. Let's put it in Ireland. So that's the reason for the Irish success story. All right, so this is the outlook now, quite split in general, Germany, bad news. For next year, as you can see, a bit better in general. We will probably see a recovery during the course of next year, but it will be quite slow and not very impressive given the downturn this year. Looking more specifically at Germany, it's been once again talking about this, the sick man of Europe. I don't know if you read The Economist, but they had a couple of weeks ago this new title, The Sick Man of Europe. They would call that actually as well in the early 2000 because of lack of structural reforms, the economy doing poorly. And now again, that has been raised. I think perhaps this is a bit exaggerated. For sure, Germany has many structural headwinds, challenges in the car manufacturing sector. But so far, what we've seen is actually a quite expected downturn in the energy-intensive industrial production. So that is actually what you see here. This is a snap from Financial Times. Energy-intensive industrial production is actually explaining the downturn so far in Germany. It's not that German households are suffering more than the Spanish ones, for example. Okay, but looking at Europe in general, we have some indicators. The classical indicator is this purchasing manager indicator. I don't know if you're familiar with it. They simply ask purchasing managers, what's your expectations for your business over the next 3 or 6 months? And then they lump that together into an indicator. And typically, they are interpreted as if you're above 50, that's thumbs up, growth. If you're below 50, that's contraction. And now what we see that manufacturing sector has been below 50 for quite some time now. We saw that in Germany. That's the reason why Germany is doing so poorly. But more worryingly, in my mind, is that also now the services sector in Europe in general is coming below 50. So actually the total here, the composite, is also below 50. So that suggests to me that in the short term, in the autumn, we will see slower growth, actually contracting economies. But it doesn't guide you any more than this autumn. It doesn't tell you something about next year, actually. So they don't know more than we do, actually, in the future. That's highly uncertain. Okay, what we also can see is that retail sales that recovered strongly after the pandemic now is contracting in general. That we see in most countries, also in Germany. All right. It's a lot to talk about, more structural challenges, deglobalization. We will come into the trade topic also when we discuss US and China. I will try to balance that discussion a bit and say I'm not too worried about deglobalization. I think for sure, it's many geopolitical risks. The polarization out there in the world is not good news. But it's not that most countries are closing down and really being autocracies again. If you look to the left here, trade, for sure, as share of GDP, has declined a bit over the past few years. But that seems only be due to China and the US. Okay, big countries. But good news here, look in Europe, actually, what's happening. The share of GDP trade is actually highest ever. So that's why you could talk about more, if you're more an optimist, of friendshoring. We still choose to trade, but we do it with our friends. All right, so this presentation is now going to be more and more optimistic until we get to Sweden. So here is the inflation picture. I mean, it's fantastic. If you recall 1 year ago how worried we were about the winter that passed. You recall that, it was this inflation shock coming. How will we manage this winter? Production facilities probably have to close down. That never really materialized, right? So when the winter arrived, actually, Europeans in general, firms, companies, households, they saved a lot of energy. So actually prices fell quite early. And now if you see on the natural gas inventories, they are already at the aim target for November this year, so very high, suggesting, at least in the short term, the natural gas prices will not pick up much more. So that's really good news, and of course very important for inflation in general. Then we don't know, the pessimists here, they would argue, okay, we don't know, it could be a cold winter. Sure, and the next winter, what about the next winter? but we don't know about that. It could also be mild winter, to be honest. There are many signs globally now that inflation is coming down. And Glenn will come into the US situation where they actually managed to get inflation down to the target of 2% without harming the economy, which is a great success story so far. But if you look at it globally, one important thing why we had this inflation in the first place was not only the energy shock in Europe, it was actually also the supply problems coming from the pandemic, right? And there are kind of measures of those global supply chain issues. And this is what you see in the chart here. They were quite elevated 1 or 2 years ago. The ships were not there. It was a problem. We demanded a lot despite the pandemic. Now they've been normalized. And that suggests, as you see here, it seems to be a correlation with this is US inflation. So US core inflation will actually fall, which will be important for everyone. Even more important, I would say, for inflation is what happens to commodity prices and freight prices. So the ships now is on the right place on the right time. So freight prices has actually normalized. good signs, although that is not super important for inflation, actually. In general, freight costs are very low in terms of, if you buy an iPhone, for example, you can imagine the freight cost, the input cost of freight is marginal. So it's good news, but it's not super important. This is much more important. Commodity prices in general. And what you see here is the shaded area is since the 24th of February last year. And you all know what happened then. So what I want to highlight here is that commodity prices actually, since then, has declined, not increased. In general, I don't know about here, but in Sweden, it's a conception, it's usually said that the war in Ukraine has caused commodity prices to increase, which in turn lifts inflation. I would argue that in general, that's not the right way to put it. We know that certain commodity prices rose, for sure, wheat prices, for example. But in general, commodity prices, they actually rose back into 2021, or even 2020. And that they did when we actually had those supply problems. The demand was super high. China was doing good as well. But then when demand slowed in 2022, especially in China, commodity prices actually came down. So in general, metals, food prices, and this also, in the end, will translate into lower consumer price inflation. It will take some time, but we're probably there now. So I think this is a very encouraging sign that inflation will normalize. All right. What does this mean for policy rates, interest rates in general? Good news here, we are close at the peak, but we think actually it will tilt over for the ECB to next week do their last hike of 25 basis points. It's a very tight call. It's a 50-50 call, but in general, in Europe, in the euro area, the core inflation is still a bit too high, so that we think that the ECB could, be comforting and stay on hold. The Fed, they did their last hike back in July, and are expected now to stay on hold, and we see forecast of declines or cuts in policy rates Q2 next year. All right, and then quite rapidly. We are on very, very high levels. This is a long time chart, 25 years. And as you can see, it's exceptional how quick, and also the levels now. And this, of course, is one explanation why the economies will slow down, and also one explanation why inflation have come down. All right, let's move on. What's going on in Sweden? And I will restrict this presentation to talk about economics. You probably heard of everything else, but I will focus on the economic side here. And the big worry then, that you also might have heard of, is the vulnerability of Swedish households. So, and that vulnerability comes from two sides. First, we are highly indebted, right? So household debt as share of disposable income is much higher than the euro area average. That's the first thing. Now, that need not to be a problem if we fixed those mortgage rates for long. Say if we had fixed mortgage rates for 30 years, it didn't really matter what the Riksbank would have done now. But then we also have this peculiarity that the Swedish households prefer to be on flexible mortgage rates. So typically we fix our mortgages on perhaps 3 months. In some cases 2 years, 3 years. Seldom, very rarely more than that. So that means that what the Riksbank does when they increase the rate, it actually affects us quite directly. And here you can see the average mortgage rate in the stock. So not only new contracts, right? This is the average in the stock. And we have actually come from a situation where we started last year at 1.5, and now we are above 3. And today, if we go to any bank, including Swedbank, you have to pay, say, 4.5. So that's a shock, really, after all those years with declining rates. And then we look at the situation in France. The ECB, they have raised the interest rates as much as in Sweden. The French households so far, they've not been affected, basically. How come? Well, you probably know the answer now. They actually fixed their mortgage rates in general on 20 years. So most households actually, doesn't matter what in the short term the ECB does. So you will have a lasting effect, but in the short term, they are more resilient then. So this is the picture why Sweden stands out as vulnerable. And you can see the consequences for sure. If you look at household consumption in general, in volume terms, it's declining. It's been doing that for more than a year now. If you pick out some specific consumption like that is not perhaps necessary, like food, this is what you see here is consumption of furnitures in volume terms. It's down almost 25% over the past 2 years. So something is happening really. And this is of course related to the housing market then. House prices have declined by 11–12% so far. The construction sector is doing poorly. And I should say that the construction sector, those who actually build housing. So it's very much housing that is going down. It's completely stopped for 1 year now. Everyone who can, they just jump out. It doesn't make sense to build houses anymore in Sweden, or apartments for that matter. But if you look at the housing or the construction sector at large, that's also quite resilient actually, because we have many infrastructure projects and so forth that goes on. So it's not that bad on an aggregate level, but specifically on housing and apartments. All right. What we talk a lot about is our weak currency, and we didn't do, as you did, join the euro. And that was perhaps a mistake in my view. We had this voting, the referendum 20 years ago, where Swedes opted to stay out because we didn't want to associate with the weak ones in the southern Europe, with the Greek and the Spaniards, their economies. We like the Germans. Anyhow, this is what has happened over the past 50 years with our currency. So 50 years ago, we had to pay 5 kronas for 1 euro. Today, it stands almost at 12. And why, you may ask, and then I'm afraid the economists have no answer. Well, they have many answers. I should perhaps correct myself. So this is highly debated now. And typically, this is one of those situations, you have 2 economists and 3 opinions. So this is what we read now about. It's all possible explanation. It's our low productivity, high wage growth, the global uncertainty, the fear of our housing market. My view is that this is a risk premium now that is put on Sweden, that there is a global fear for our commercial real estate sector. So what will turn this trend, perhaps in the short run at least, is that global inflation, global interest rate trend will actually start to decline. So perhaps during next spring or so, we will see a stronger SEK. It's not much the Swedish politicians can do. Besides actually the fiscal policy, I always tend to blame what's going bad in Sweden, the Swedish politicians. They have this very special thing that they don't know how to spend money. I don't know how it is in Latvia, but in most countries in Europe, the politicians are quite good on that. And not, often they spend things on not so wise matters, consumption, not investments. But in Sweden, it doesn't matter if we have a financial crisis here. This is the public debt. It hardly moves up. If we have a pandemic, if we have an inflation cost, the public debt, the trend is downwards. We can't get it up. Is that not a good sign? Many countries, I think, would envy us in this case. No, I would say this is good. This is a bad sign because you have an alternative cost here that many things in Sweden are not working properly. We have now problems with the welfare state. We have problems with we're already highly taxed. So I think you could argue both from the left and the right hand that many things that could be improved. And this is, of course, the cost here. I mean, imagine if we could perhaps close in on Germany, who has twice as high public debt. That's a lot of money that we could do. But the Swedish politicians, they don't dare to. They are very cautious. We have this fiscal framework. And I actually had this similar presentation for one of a former minister in the government, who was also in the government in the 90s. So this is actually an explanation to this cautiousness is our crisis in the early 90s. So the politicians that were there then, they are marked. And he told me that the bad news is that it may be rational to raise the public debt a bit to good things, but I think our generation has to die first. And actually, the former prime minister in Sweden, now the head of the Social Democracy Party, Magdalena Andersson, she was working in the mid-90s as well. She's also marked with this crisis. And so I think there's no improvement here. And this is actually, I think, one reason why we also see the weak krona. Because if we would do things that lifts potential growth, we will not stand out as a bad, that could also actually strengthen the krona. Okay, I will summarize quickly. I will finish even more positively. There are some good things in Sweden. We have one of Europe's strongest labor market. Unfortunately, Netherlands, the Dutch one, has passed us now, but we have the second best, highest employment rate in Europe. That's a good sign. The second good thing is if you look at a bit more long term, even though, as Keynes said, we might be dead by then, but we are attractive in the long term because we have better demographics than many countries. Actually, similar to the US, we have a growing population. That's a potential, right? And especially if we compare to Germany. Germany looks like Italy, Japan over the next decades. Not very good news. And also, according to European Commission, we are an innovative country. Actually, we are an innovation leader, according to the European Commission. I don't know about this measure, how it could be reliable and trustable. But I notice here, I'm afraid that Latvia is doing not so great. You are a moderate innovator. So you have a pickup to do here, Liba. Okay, I stop there and...